or even EMI transactions. And this Amazon Prime Day, discover joy with great deals, blockbuster entertainment and new launches. Join Prime.
What does India's first iron plough have to do with renewable energy? As it turns out, a lot. Because the fires and the furnaces that move the world burn with ambition. You see, it's about where we're going and who we're going with. Walking into a future of possibilities. A future that's limitless.
In this ongoing corona pandemic, if someone in your family or the one known to you has lost their life due to COVID-19, then do not lose heart. Delhi government stands with you in these difficult times. For families which have lost their dear ones, Delhi government has initiated a Chief Minister's COVID-19 Family Financial Assistance Scheme. You can avail help in two ways: monthly financial assistance. Those who have lost the earning members of their family will get a financial assistance of Rs 2,500 per month. One-time ex gratia assistance. Those who have lost any family member due to COVID-19 can get Rs 50,000 as one-time ex gratia assistance. For detailed information and application, please log in at edistrict.delhigovernment.nic.in. Delhi government stands with you in these difficult times.
Welcome back. You're watching Buy Now Sell Now on ET Now, and time for the viewer queries. And good morning Kunal as well as Rajesh. Let's bring on board our first query for today, and this one is coming in from Ramesh, and he wants to ask about Glenmark. He's saying that stock has been falling and he has actually been buying on dips over the last 3 days, though he believes that the sales growth will be poor in the next, or rather has been poor in the last 5 years. So he's asking, do we expect a comeback for Glenmark Pharma? And Rajesh, I'm sure this question is for you. How does Glenmark Pharma look over the longer term? Do you see a comeback come in this particular counter? Because Ramesh has definitely been using the opportunity and buying this particular counter on dips.
Yes, it's a very good company for a longer term horizon. By longer term, I mean you have to hold this for maybe time horizon of 12 to 18 months, and then I'm very pretty sure that it will give good returns. As far as Mr. Suresh is concerned, as you said, he's been averaging in the last 3 days, and that's a pretty bad idea to do. Unless until stock falls by more than 10%, I won't suggest any averaging on that, because every 5 rupees, if you are averaging nothing. So unless until your stock falls by 10%, don't average it out. But the company is good. Hold for a longer period time horizon. If that stock falls for say 10%, then you can always average it out. Have a long-term horizon. Stay with the stock.
It's a very important point being made by Rajesh there on averaging and the strategy that you should employ. But also equally important is a stop loss. So remember that as well. Anuradha is asking about JK Paper. She's already invested, Kunal. She's got 125 at levels of 94. And she's asking whether it can be added at current levels and she can hold for the next 1 to 2 years. What should she do?
The viewer can look to add the stock at current levels. The volumes have dropped down significantly for the paper stock, specifically for JK Paper. The stock has been consolidating since the start of the July series, or the July month as such. So I think that's also a good signal that the stock is trying to absorb the kind of rally and the rise it had seen in the month of June. So I think that's a very mature and balanced kind of reaction coming out from JK Paper as stock price. So would suggest that the viewer can look to average at current levels, and I think if the potential breakout in the trend continues for the stock, you may look at a target potential of at least 250 to 55 over the near to medium term for the stock.
Okay, this query is coming in from Sapna, and she wants a view on Polycab. She wants to know whether it's a good long-term buy at current market price. Rajesh, does it make sense for someone to enter Polycab cables now? Is it worth keeping in your portfolio over the longer term?
course, yes, that's a very good stock, and I have been recommending this since very long time. If I remember correctly, it was around 500 odd rupees around a year back, and it's trading at 2000 odd rupees at these levels. So even at these levels, I think it's a good buy. The company has been doing well. They are basically into FMEG, that's fast moving electronic goods. They have launched some new products that have been taken very well with the market. And I think the kind of valuation they quote at this point of time, despite the kind of run up with the stock have seen, there are still major upside left just because when you look at valuation of the peer group companies, this company is doing very well, margins are very high, and once the unlock thing takes place in the entire country and we are going to get rid of this corona, I think these kind of companies which are an ancillary to real estate sector and such would do extremely well. One can not only hold to the stock, but we have a buy call too.
Absolutely, and I do hope that we can get rid of corona faster than you can snap your fingers, Rajesh. Coming back to you on this next one though, Madhusudan's asking about Federal Bank. It posted its results not too long back. He's got 800 shares at levels of 87.9, and he's asking if he should hold or should he sell at this juncture. Asset quality, from what I remember, Rajesh, was quite steady. So that's a good thing, isn't it?
Kind of scenario of some bank showing a stable asset quality is quite a good sign that's going to perform better in coming days. Even the margins were better and IMs have come to a stable level, I would say. The best part is they are mostly focused in the South Indian market. They have no active promoters as such, and sometimes there are news of some takeover, although I'm not saying that it's being takeover, but these kind of smaller South Indian banks have always been a takeover candidate. So even the quality of management is very good. So I would say Federal Bank is a good choice for a medium to long term horizon.
Is coming in from Santi, and this one on Excel Industries, saying that she's bought this particular counter at an average price of 1084 rupees per share, about 30 shares. Would like to add more, as specialized chemical bull run would be for another 2 years, is what Santi has to say. Please give your fundamental views and perspective for addition at and what sort of price level should one look at entering into or rather adding on to Excel Industries. Rajesh, do you have a take on Excel Industries? How does this counter look?
See, basically, the way things are moving up, with government's focus on agriculture and rural economy and all, this is one company that is going to be benefited, no doubt on that. Secondly, with the announcement of IMD that the monsoon is going to be almost normal this year, the reservoirs full of water, I think agricultural companies are going to be in the limelight. Only problem with Excel is the volumes are low, but if you are a long-term investor, that doesn't matter at all. One can continue holding to the stock.
All right, let's take the next question, and this one is from Saumitra Joshi, and he's asking about Bandhan Bank. I do want to take this across to you, Rajesh. And incidentally, sorry Kunal, we're getting a lot of fundamental questions today. That isn't normally the case. But what would you say about Bandhan Bank, Rajesh, in the context of a segment that I think has seen quite a bit of stress because of the COVID-19 pandemic? Would you buy into this counter?
COVID-19 pandemic, Bandhan Bank faced a wrath of the investors just because of the fact that a large part of their loan book was from Northeast state, especially Assam, where the small ticket size loan were facing a problem in recovery. But we should not forget that this is a very aggressive bank with around 4,000 banking outlets, out of which 1,000 plus are bank branches and the others are DSC. They have been expanding very well. In the recent past, there was a ban on expanding their branches just because of the shareholding pattern, but that has been taken care of. Going forward with the kind of NIMs, 8% plus, this bank is going to do well. Yes, there are concerns because of their loan book in the Northeast, but that will be taken care of in the longer term horizon. Now the bank is giving focus on recovery, and we should not forget that they have taken Group Finance also. So this makes a play not only on bank but a housing finance sector as well. So all in all, this is a very good bank. Valuations are very cheap. It's trading at almost 50% of its 52-week high, I would say. So yes, one can take an exposure, but remember one thing, one should have a time horizon of 12 to 18 months where almost 20-30% upside from the current price is quite possible.
All right, we'll just take a detour from the queries on to earnings that is reflecting on the bottom of your screen. That is Dr. Reddy's. They've reported the Q1 earnings right now. If you look at the PAT, it's coming at around 50 crore estimate 690 crore rupees. If you look at the revenue figure, their revenue is coming at around 4,919 versus 4,417 crore.
Let's talk a little bit. There seems to be a bit of an issue with Cheryl's feed, but what she was talking about is that the revenues come in at just over 4,900 crore rupees. Remember, the sales were seen at 4,950 crore rupees. So seemingly the revenue for the quarter is coming in line with expectations. The PAT though has come in below expectations. 690 crore rupees is what the PAT was expected to come in. It is coming at 570 crore rupees, and you're seeing a reaction on the stock. It was already under pressure. Remember, the entire pharma basket was under pressure in the morning today, down as much as 2.2% or 2.3% as we speak right now, losing a bit of ground. Margins were expected to come in at 23.2%. We'll have to see what the latest is on that front. And remember, there were certain expectations in terms of an improvement in PAT on account of lower taxes. There was an expectation that the Russia plus CIS plus RAW would grow in the high double digits on a low base and a stable currency. We're just waiting to see if we can get in a voice to try and understand how the markets are taking, or how the research aspect is taking the earnings front. In fact, let me take it across to Rajesh then, if we still have him on right now. Just to get an initial expectation, Rajesh, if you were to look at the numbers just at the top, you have a miss seemingly on the PAT number and inline set of numbers as far as the revenues are concerned. What are your initial reactions?
Actually, if somebody looks at the numbers, they are below expectations, I would say. But we have to go through the details why this PAT has come down, whether it was one time or some other reasons. So that would need to be taken care of. And the second part is we were very bullish on the Russian business especially. So if that portion is doing well, I think if the stock tracks below 5,000 odd rupees, maybe 4,800, 4,700, that would be a very good level for a long-term investor to take exposure in the stock.
All right, so details, in fact, and as we try and get we try and get an analyst to join in just to take us through what the expectation was and how the performance has been. Let's read through the numbers a little bit. You have the PAT number that is coming below expectations, in fact, and you have the revenue number that is coming at just around 4,918 or thereabouts, and that's more or less in line with expectations. All right, we'll have to come back to Dr. Reddy's in just a short while, or we have, okay, as I understand it, we have Pankaj joining in. Pankaj, we're waiting to hear from you. What are the key details that you're picking in, seemingly a miss on the bottom line? Okay, so we're waiting for Pankaj to join in. In the meanwhile, let's take some of the queries that have come in. We'll come back to Dr. Reddy's as and when we get some more information. I want to come to you on this one, Kunal. Aurobindo is the stock that we're talking about. Avinash is asking, he's gotten at levels of 982. He's asking what he should do at these levels. Where do you see support?
So I think the nearest support for Aurobindo Pharma is approximately at 920 mark. 920, 925 is a good and a strong support for the stock. That's where I think the stock has bounced off twice in the last 2 attempts. So in the last 1.5 odd month, 2 attempts towards those 920, 925 mark, and the stock has managed to bounce back. So this could be a third attempt for Aurobindo Pharma. But the only concern with the stock this time around is that on both of these attempts, as well as the third attempt which the stock is trying to make, the stock has been making lower lows for itself, which means that it's trying to approach towards the support trend line in a weaker kind of a fashion. So whenever that happens, there is a higher probability that the stock may give you that breakdown, breakdown on the chart. So 920, 925 is a stronger support, but the manner in which the stock is trying to test this support zone three times, I believe a probability could be attached that the stock may break below the support this time around.
All right, let's talk some more about Dr. Reddy's, and we are joined by Sapna Jhawar of Daulat Capital. Good morning, Sapna. How do you read into Dr. Reddy's numbers? Have they met the expectations on the surface? As per ET Now estimates, the PAT is definitely below ET Now estimates.
So the PAT is in line with our estimate. Where it has actually, been disappointing is on the margins front. So I believe we were expecting somewhere closer to 23% EBITDA margins, but that's been a disappointment. Though, on the lower tax basis, we've been able to meet our PAT expectations of 6 billion rupees or so 5.7, 5.8. So they're near about there. Yes, but it's definitely a disappointment, a big disappointment on the margins front. The first reading says that.
To the segmental or other geographical breakdown of Dr. Reddy's numbers. If you look at what numbers that I have, the revenues from emerging markets is showing a growth of about 14%, while we expected it to be up about 10%. What do you think must have contributed to this sort of a growth coming in from emerging markets for Dr. Reddy's?
I think for emerging markets, largely for them, especially the ROWs and the other Russian markets. So on the lower base, we were expecting a stronger growth. So that was, pretty much in line. So largely, even if you see last time, these markets were not pretty much open because of the vaccination drive. So now they are completely open. So that's a healthy sort of number and in line with what we were expecting. Because all the markets are open and also the branded drugs have now started to flow in again.
Understood. Pankaj is joining in right now. Pankaj has been looking through the numbers. What is the key aspect why we've seen a bit of a miss on the bottom line, Pankaj?
Right, you should not look at these numbers the way they are reported. We'll have to do a lot of adjustment. But if you look at the US sales, it's just down 1% sequential basis. It was expected to be slightly on the positive side, and maybe that's why you're seeing that, reaction coming in with a 2.5-3% sort of a downtick that you're seeing for Dr. Reddy's at this point of time. Would not be surprised, but at this point of time, probably it looks as if there could be some earnings cut. But let's wait and watch for the commentary. There always could be one-off. There are so many drugs they have, so many licensing products they have. It could be quite different before we take it forward. Our guests are still with us. Ma'am, if I could start by the US sales numbers, what do you make of it? Do you think US sales is something which is pointing out towards with a $2-3 million miss, or maybe a 2%, with a 2-3% sort of a miss? How would you look at that?
US has been a miss. We were expecting closer to $250 million at around $240 odd million. There's been a $10 odd miss on the US being flattish on a YOY basis and even on a sequential basis there. So the larger number of products that were launched, have been towards the fag end of the quarter. And hence we expect that the next quarter should be more reflective of those newer launches coming in. But we were also expecting, a little incremental sales coming in because of the opening of the market again, more so on the channels of your derma and the other oncology products out there. But that's clearly not been. And I think the pricing pressure on the injectables have also been pretty evident in this quarter.
Right, Nikhil is also now with us. Nikhil, what is your first reaction?
So overall numbers are, here the top line is in line with our estimate, but the gross margin is below our estimate. So that is also flowing directly to the bottom line. So overall, I believe our, North America is bit disappointing numbers, but on a Indian front, domestic front, they did really well, mainly because of the low base and COVID-related, benefit from the COVID-related products. So overall, the numbers look decent.
Right, Nikhil, I just wanted to understand how would you look at this COVID-related benefit that India sales has got? It will not come in Q2 with the same magnitude. So how would you essentially tend to look at it? Is this the peak of India sales?
No, because we are expecting this to continue for at least 2 more quarters, because they are going to launch, apart from their existing products, they are also going to launch 2-3 new products in the COVID portfolio as well. And their Indian business, they are also going to launch many new products in domestic market as well. So going forward, we are quite positive on the India business, and we believe it can continue the higher double-digit growth rate.
Your first reaction, will there be downgrades or it will just be a sentimental move?
It's a sentimental move, obviously. And we don't see any downgrade, but yes, the margin is negative surprise for us on a gross margin front. So definitely we'll see some, EPS cut here. So.
Commentary? Okay, I think we've lost the line with Sapna. Nikhil, thanks so much for that. Sapna, thanks so much for taking out time for us. With that, it's back to you in the studios.
All right. Thanks, Pankaj, for putting all of that into context. Dr. Reddy's laboratories a bit under pressure at the moment, losing ground. The analysts seem to think that it's a sentimental reaction, and there is a disappointment on the gross margins front. Remember, margins were expected to come in at 23 odd percent, and they have in fact come in at around 20 odd percent. Let's move on then and talk about more of the queries that have come in. I think a lot of you have been waiting patiently by. Hopefully this has given you a little bit of context in terms of what to do with Dr. Reddy's laboratories. But we've got a question coming in from Arsu, and this is on Amara Raja Batteries. They've not said what level they've bought at, but asking about the recent trend, Kunal. What do you see on the charts?
I think it's bearish, frankly, for Amara Raja Batteries, the stock, which has managed to correct more than 20%. So, generally we say that a 20% correction should be a good enough, support zone for the stock price, where process of mean reversion, gets completed, and you see the stock generally or demand, originating back again for the stock. But from those 1040 levels for Amara Raja Batteries, start of 2021, the stock has just gone through a one-way kind of a slide at 720 approximately. I think it looks a bit tricky that the stock may find a bottom anytime soon. So I believe the viewer should be a bit cautious over here, and I would definitely not suggest to buy on dips, at least at current levels, till the time we don't see a revival coming back into the stock.
Coming from Prasanta and wants to know about CDSL. Should one actually enter this particular counter, and at what sort of price should one get into CDSL? Kunal, what's your take on CDSL? That particular counter has been seeing a sharp run up of late. So what sort of a price should one look at to get into the counter?
It's very tricky because the stock has done exceptionally well. I think one of the key candidates for the post-COVID rally was CDSL, and the stock has rallied up from 200 to 20 levels to almost a 1500, 1600, which it tested sometime I think last week. But now I believe that the indicators are extremely overbought for CDSL. So last week also we were discussing that the RSI, for example, for CDSL has come back to 94, 95 levels, which are extremely overbought territories to initiate a fresh buy. And typically, when you see such kind of overbought levels of RSI on the monthly charts, you expect at least a 20 to 25% correction from its major swing highs. So that could probably bring almost a 1200 to 1150 kind of a zone as a modest entry point for the stock. So I would suggest some more wait for the stock and wait out for the levels of 1150, 1200 if you're looking to buy from a long-term view.
All right, Indumati's got a question on persistent systems, and she's asking Rajesh if it's a good portfolio stock.
So we have been recommending this since it was trading at 3 figures, and now it's almost 4, 5 times, 10 times from those levels. And still, I think there's a lot of steam left if you top up mid-cap IT space, although calling it a mid-cap at these levels would be a little difficult, but still I think the kind of product portfolio they have, the kind of service portfolio they have, the kind of results they have declared in the recent past speak very well about the company. One can go long on this stock with maybe a 20% upside target.
Okay, this query is coming in from Muthupalani and wants to know about Avantel Limited. Remember that particular counter signed a contract with Lockheed Martin recently, saw a sharp run up post that as well. What's your view on this particular counter, Rajesh? Do you track Avantel? And if someone wants to invest or who has already invested in this particular counter, how does the prospect look over the longer term?
I'm really sorry I couldn't get you on the name of the company.
It's Avantel.
Sorry?
Avantel Limited.
Hello.
Well, it's a stock that is called Avantel, but nevertheless, we'll move on from that and we'll talk about if you have a view on Godavari Power and Ispat. And this is a question coming in from Sagar. He's bought at levels of 550, Rajesh, if you have a view. This is Godavari Power and Ispat Limited.
Alex, this is a Raipur-based company and doing very well. If you look at the numbers, they have been extremely well. The margins have gone up like anything. And still we think that there is a lot of steam left in the steel sector as a whole. Steel is very hot. Yes, one can go long on this stock. Even after this quite a run up, it's trading at a 4 figures now. Still some 15-20% upside can be very well expected in the next 2 quarters.
All right, this one is from Pragya and wants to know about Deepak Fertilizer. What sort of a short-term target should she look at? What's your take, Kunal? What sort of target should one keep in mind for Deepak Fertilizers?
Oh, I think the stock looked good. The fertilizer theme overall has been looking quite strong, and I think the monsoon season is generally when you see these kind of names. They tend to perk up in price action. Today also, I think if I'm not wrong, the stock is up some 2.5 to 3%. So I would suggest that you can wait for at least another 15% upside from current levels if you have a time horizon of at least 3 months or more.
Kunal, coming back to you on Vimta Labs, we've got Seema who's got 100 units of this at levels of 329. She's asking if she should add more.
Stock has just confirmed a breakout on the long-term charts, and I sense that the reason for buying the stock at 329 levels odd could probably be in the fact that the stock is confirming a bigger breakout on the long-term charts. And when you typically see stocks hitting back their 3-year highs or 10-year highs, in that sense, I think those are very good prospects, and you typically see the stock going into a multi-year uptrend. So I would suggest that take at least a 5 to 10% correction kind of step as a good strategy where you can look to average. So if you've started, for example, at 325, 330 range, then the next set of averaging should be closer to 300 marks. So every 5 to 10% correction which you get on the stock price from your previous entry point should be a good level where you can look to average, and I would suggest a hold, specifically if it's a longer term view.
All right, on that note, thank you Kunal as well as Rajesh for joining us on Buy Now Sell Now, giving us your take on Tata Motors as well as resolving viewer queries, and also on Dr. Reddy's. And with that note, we'll slip into a break on this edition of Buy Now Sell Now, but stay tuned, more on the other side, so don't go anywhere.